Morning, everyone. It's Grow with Joe here, here to give you more lessons on how to help yourself grow physically, mentally, emotionally, spiritually, from a personal development side, or financially, with all your financial planning needs. Today, what we're going to talk about is student loans. Student loans are tends to be a big issue for a lot of folks. Was it 10 years ago? We had as the United States $250 billion in student loans. Now that number is $1.6 trillion. It's a big number, and there's a lot of different rules. And the key thing is we want to try to figure out what's the best way to pay it down and everything. Um, But yeah, when it comes to student loans, you basically have two choices. You can either refinance to get a lower interest rate and pay down your student loans, or if student loan payments is an issue, then you can get on one of these student loan repayment programs. So let's just start with refinancing first. Refinance, you don't have to stick with your student loan provider. You can, especially if it's a federal one. The key thing with federal ones is if your income is not going to be steady, or your income is not high enough to help you pay off these student loans, then you can get on one of these student loan repayment programs. Um, but if your income is higher, let's say your monthly student loan payment is $100 a month, and your interest rate is 6.5%, and you're making like $60,000 a year, you're probably better off, and you know you're going to be making that amount of money. You're probably better off refinancing, going from like a 6.5% to hopefully like a 3%, maybe a 2.5%. Interest rates are pretty low right now. Uh, and they know that you have a good job and everything, and it could help. Like getting that lower interest rate could save you a lot of money in interest. And this is what it all comes down to with these student loans: is you borrowed X amount of dollars, say it's $25,000, you're going to pay $25,000 plus interest. So the goal of these student loans is to pay the least amount in your student loan interest and in your principal payment. But so refinancing can in most cases help you get a lower interest payment, because you're going from like a 6% to a 2%, and depending on the amount and everything. The key thing is, if you do refinance, what happens is you're going to lose those federal protections that help you, that can help you with your payment, with a payment plan. I think when you refinance, you pretty much you're getting a loan, and that loan is going to be paid back like any other loan. Is going to affect your credit. They don't have those loan repayment plans that can help you out. So if you're going to go the refinance route, you just got to ask yourself, hey, am I going to make enough money to pay this off? I have steady work. And the key thing is, if you go down the refinance route or the student loan repayment route, you kind of have to choose one of those. You can't choose one and then backtrack and do the other. It's really hard, and it doesn't really make a lot of sense to do that. So the key, so if you go down to student loan repayment, that's saying like, hey, like if I'm making $60,000 a year and my student loan payment is $1,000 a month, that can take a really toll on your standard living and everything. So what you can do is you can get on one of these student loan repayment plans. Like pay as you earn is depending on when you get the loan as well. I believe it's after 2014. You only have to pay 10% of your discretionary income. And so like if you're making $50,000, it'd be 10% of like 30. You made $35,000 per year. So your payment would be $3,500 for the year. Divide that by 12, and we're looking at like $300 a month. So that might be a lot better situation, $300, than paying that $1,000 a month. But the key thing is, if that's the case, if you're going down that path, then you're probably not you're not paying enough interest to pay off the loan, and so you have to wait that 20 years for that loan to be repaid, and you get that amount forgiven. and there's different scenarios and everything that you can work out. So there's pay as you earn, revised pay as you earn, income based repayment, um, income contingent repayment. So income contingent repayment is like 20% of your discretionary income. But if you have Parent Plus loans, that's a program that you can get into with that. That is the program you can, if that's the case. So you kind of have just when it comes to like paying down your student loans, you just got to figure out like, okay, what is the best path for me? What is going to help me pay the least amount of interest? What is going to help me pay the least amount um, of principal? If that's the case, you get on one of those programs. So you just got to look at your financial plan and be like, hey, this is what I need to do. And so the key, hopefully, it's the best to pay it off as soon as possible. If that's the case, sometimes it's not the case. You just have to look at the different scenarios. Be like, hey, if I save and then I invest the rest, or like if I pay this amount and then save slash invest the rest, is that going to give me a better outcome 20 years from now than if I just do this standard plan? It all depends. You got to look at the numbers and your unique situation. If you're a doctor, I know a lot of doctors, they make like $50,000 in their residency, and then like after they're done, then it pumps up really high. So, and you can look at that as well. I'm working on a course right now to go more in depth into all these topics to like get people more to know. But just here's gives you a quick little piece of information to figure out what you need to do. But the key thing is you don't want to hide from these student loans. It can take a real effect on your credit report, and that could affect your ability to get a car loan or mortgage down the road. So you want to take an active approach. Just be like, hey, what can I do? If they're federal loans and you have trouble paying, you want to be able to stick with that as fast as possible, because like if your income is below a certain amount, then you pay zero, and that still counts as your 20 years and everything to pay back your student loans. But the key thing is, if you're not in the public service loan forgiveness, and you let's say $50,000 is forgiven, and then what happens is it's going to be like you made $50,000 in that year that is forgiven. So you have to pay taxes on it. So if you're in the 30% tax bracket, let's say your effective tax rate is 30% with state and federal, you would have to pay $15,000 in taxes to pay for that amount forgiven. So what I could do is like, hey, if you save $100 or $75 a paycheck, put in this investment account or put in your savings, depending on how you want to go after it. You'd be like, hey, this is going to be paying for your taxes, and you paid the least amount of interest and everything, and principal, and you still save for retirement and everything. So everything depends. So you got to look at your situation. Like, hey, what is my income? Am I married? Does my spouse have income? Does she have student loans? Because that might make sense to like, hey, we're married, but let's file separately so that my income shows lower. So then I'm going to get a lower student loan payment. So you got to look at these things and say like, okay, what is the best scenario for me? There's a lot of complication or a lot of rules and everything, and you want to make sure you do it right. When it comes to public service loan forgiveness, one thing people tend to forget is to get their 10 employment certification forms. So you need 10 of those, and you need to show that you made 120 payments while you were working. And I think it's like you have to work at least 30 hours for a nonprofit or for the public sector to show, and you have to verify this every single year. So you have to get your employer. So this is an issue for some folks, and you have to be on a repayment plan if you're on the public service loan forgiveness. But also a big thing is the president signed an executive order, so you don't have to pay your student loans until the end of the year. If you want to make an extra payment, that can help pay down your student loan. But like if you're a public service, don't make the extra payments, because these payments count as your 120 payments. So it all depends. If you're going to pay the loans off before the repayment period, then just go ahead and make the extra payment so you save on money on interest. So you're not accumulating interest, so you're lowering the principal, and that can save you money down the road. So it all depends. So don't, if someone tells you one advice to say this is what you got to do, it might not be the best advice. So hope you enjoyed today's lesson about personal finances. If you have any questions about student loans, just leave a comment and I'll answer it. If you want an analysis for your student loans, just leave a message, say, hey, I would like to get a student loan assessment to see what is the best situation for myself. So hope you enjoyed today's lesson. And like always, if you go with Joe, you can grow with Joe, because Joe knows Joe. Take care, and I'll see you tomorrow at 9 a.m. to talk about something personal development wise. All right, take care.